Good morning, everybody. Good. I hope everybody's doing great. Happy Monday. Um, Big news dump on Friday night. Moody's downgrades U.S. debt. What does it mean for the market? What does it mean for the budget deal that might happen? What does it mean for the bond market? And what does it mean for crypto? This week, we're going to be addressing a lot of that. As the week progresses and we start to see what happens with the budget, you can expect to see some real bangers out of Frank. He's going to send you guys his analysis and insight into this upcoming budget deal. And so you're going to want to make sure you're continuing to check your email boxes and are subscribed to Power Moves. But that aside, we can already start to see what's happening with the market. And
we lost Mark.
we got
There, he's back. He might be back.
Did we lose me?
You were a little in and out. You got those squirrels running the internet in Austin, like the internet cable hub of the planet.
Yeah, well, AT&T fiber maybe not as great as they crack it out to be. But the greater point here is that this morning when we opened down 60 points, the two paths are the market says, okay, we process everybody that want to get out, got out this morning, and then the buy the dip crowd steps in, or people look at this, they haven't done very much, and they panic and start selling. So far, we see a bit of buying. I want to let things progress a little bit before I jump to any conclusions here. So let's take a look at my screen real fast. And don't worry, you're going to hear the great insight analysis from everybody here. But yeah, SPX down $25. Basically, where we were around 2:30 in the afternoon on Friday. Now VIX got almost to 20, but now they're fading that. And when we look at bonds, TLT is holding 85. The low from April 11th was exactly 85. We did I think get slightly below that, 84, 83, but we're back above 85. TLT is right on my breaking point, right where I'm watching. What does that mean for bond yields? Right, because that's really what TLT is, just a stock expression of bond yields. And that 10-year back above 4.5, 30-year 4.99, and that's the 99. The Germans right now are saying no, don't go above 5. So that's what those nines stand for. So over the next couple of days, if bond yields do start to really roll over, we see the 30-year get over 5. We got the 10 already over 4.5. Eventually, and over the course of a few days, that is going to dig into the market. That is the one thing out there currently that is, an immediate risk to the market. I think the budget deal, we still got time there. China just got pushed back to the back burner. Trade kind of has across the board. We're kind of starting to ignore Trump headlines. But if borrowing costs continue to go higher, this market will roll over. If you see bonds start to recover, I'm buying Russell 2000 with both hands because it's super interest rate sensitive. Now,
Mark?
Yes, Hans.
We lost you again, Mark.
Oh, huh.
There you are.
All right. Well, to kind of put things in perspective with her perfect pitchforks is our queen. She is the queen of the candles and the duchess of the doji. She is Alicia Leslie. My screen, Alicia. What are you looking at on the charts?
Look at this recovery on the 5-minute SPX. Holy cow.
That's like,
I
It's
know.
unbelievable.
Wow.
Look at my 5-minute pitchfork, held the support there on our opening.
Boom.
And now we are coming up on some resistance, 59.43. Then, of course, closing the gap. The market will need to make a decision once it closes the gap. Is it going to continue to rally? Does it need to close the gap to roll back lower? But that is quite the recovery, I would say.
Yeah, I mean, I considered this a bit of a nothing burger, but you know, the ability of stocks to the stocks will ignore the bond market until the bond market picks up the stock market and screams in its face. And that's
Or
kind of
body
where we are
slams
right
it.
now. Stock market's got its beats on, it's playing Call of Duty, and bond market's downstairs screaming, time for dinner, getting just angrier and angrier, and then finally gets fed up. It's gonna go upstairs, take off the stock market's headphones, and just scream, "It's time for dinner!"
And say you're grounded.
Yeah,
You're grounded. Oh, we lost you again, Mark.
And if this anecdotal story sounds like a conversation between a father and his 15-year-old son, then, you know, just saying.
The
All right.
market's going to get grounded. You're right. The market's going to get grounded at some point.
All right.
You guys done?
Yeah, Alicia, yes. Back to the bond market.
More importantly, the bond chart, the 30-year. This close, now remember, the close is always more important than intraday. That 85.10, we got to see a close over 85.10 for the bond market to recover from here. If it doesn't, we very may well go to 82.73. I talked about this on the chart of the week. Put this downtrend line in. It has held each time it was tested. So to get a real recovery on TLT, not only do we need to close above 85.10, we need to close higher than this downtrend line. Then we can trade back above to 90. But until those two things happen, bonds are looking bearish here. Here's the yield chart. This resistance has held 3 times now, testing it. It's now support. You want to see a close below that 499.5.
That's the 10-year?
Mark's
Oh,
been
that's the 10-year,
talking
Alicia. Okay.
The shorter term also up against resistance on the yield. It's held every time, well, except once here, but the last 3 times, and now it's testing it again for a 4th time. Same idea with the shorter term IEF. There'll be some support just below here, that low from last week, 93.25, 93, and then below there, 92.82. There we are on the 5-minute SPX, hitting some resistance. That's what I have.
All right. Well, Hans, with rates going up, that applies specifically to income trading, doesn't it? So let's slide over to Hans, and why don't you talk a little bit about what you see in this market and how the bond market and this big move is affecting your trading?
Yeah, I mean, I think as you often like to say, the IWM is one to watch, right? Because that's the higher rates are going to really put some pressure on that part of the economy, very debt sort of reliant, and then TLT, of course. But I'm a little surprised that last week I kept telling Turbo members, I said, listen, this is another day, another barely noticeable sell-off. I'm not surprised. Nobody's in this market, right? It's been a very, as I talked about on Friday's show, the State of the Market show, I said it's been very mechanical. There's been some buying, but it's been very sort of led by, people, these funds that have no choice, these systematic funds, parity vol targeting kinds of things. So it feels like it's sort of the least participated rally I've seen in a long time. So now I'm not surprised that we get this. Now, this morning, I did think maybe we get a couple of hours of weakness before the rally, but I felt like the rally is probably going to come back because when there's no one left to sell and so many people have to get in, I think the market's ability to shrug things off is powerful. Now, the mood did get a little moody. Nothing? No?
No. That was an amazing job. I love it.
Mood did get a little moody, but
Mark has his T-shirt on.
There you go. Dad jokes. Okay. I borrowed one there. So, I think this is definitely a place to watch. And I think you're right, Mark. Sometimes sometimes stocks are like in la la land and it takes a while, but that's what kind of gives us an opportunity as well, right? So, we at Option Pit, we're real volatility watchers. We watch the VIX, we watch those signs for problems underneath the hood, and bless the stock market, it's oblivious sometimes. And so when those signs under the hood start to give us an indication that something more severe might be happening, that gives us a chance to put on trades before the what hits the fan. So I think we kind of settle in here. I don't think we sell off a ton. I don't think we rally a ton. The market's gotten quite expensive. But that recession risk has sort of been reduced a little bit. We'll see how it goes. We had some news from China, Nvidia, semiconductors, so there's a little bit of uncertainty there again. But we can see a lot of stocks are doing quite well. Visa's up, the credit cards are up. Things are kind of hanging in there. And so I kind of like it, right? So we've been sort of looking at Hood's up on the day. Uber's, hanging in there doing well. I think that it's up on the day. I think that goes to 100. So, I think the backdrop is uncertain, but for income traders, that's kind of good, right? You're sort of getting this high teens VIX, and you're getting a market that may be a little bit range bound, and that works well for us when we start to look at income trades. Supported by a market that's a little bit bid right now. So, and my pick today, are we going on to picks, Mark?
Sure.
Okay, so my pick is Costco. So Costco, I've been loving it for a while. It's a great stock. I recommended it at $550 on the TD Ameritrade show when I ran a big options income book, and I still like it. It's it's got that consistent revenue, very loyal subscriber type model that I think investors really like, right? Good times, bad times, doesn't matter. Peeps got to save money, and the margins are thin. So I don't think these guys get a phone call from Trump saying, hey, you got to start eating the margins a little bit. You got to eat that inflation. They put the pressure on the suppliers. And Costco really is about thin margins. So, prices can go up, but from Costco's perspective, they make most of their money from the memberships. And no one's giving up their membership. It just isn't going to happen. They're not giving up their memberships. They're not giving up their Netflix membership. So that's why those are two of my favorite stocks. And on top of that, they've got their Kirkland brand now. And that is where they can kind of create a little bit more margin in there. So great stock, $1.50 hot dogs. You might need to bring some Tums with you, but look, that's still a great deal in a difficult market and a difficult backdrop. I think that's still, that's an inflation buster right there. So I like Costco, I think, and we're looking at income trades there as well. The MTI is starting to really shape up in a few names. I'm seeing some nice greens, some solid yellows, but a lot of greens too. And that gets me a little bit excited about, putting on my turbocharging it.
My friends just joined Costco this weekend. One of the best things about being a Costco member is your rental cars. They have the best deals on rental cars.
The car buying service is actually pretty good too. Few other things. As you get older, my mom gets her hearing aids from there. Great for that.
And they sell gold.
2 for 2, Hans. All right, now let's pivot to Andrew and the rip zone. I got to tell you, this is like the perfect rip zone environment with the movement. One of the things that you talk about is the fact that stocks will stop moving, stocks will move one way, stocks move the other, or stocks will just sit. One thing that always moves, one thing that always creates opportunity is volatility. And you're going to be trading around this. And it's clear there is volatility right now from the bond market. So why don't you talk to us about what you're seeing here, Andrew? And if
Okay,
you want to share your screen,
I guess I got to share
my.
my screen.
Yes, you should share your screen.
First time I've done this. First time I've done it. There we go. Hey, so yeah, we started Rip Zone on Thursday.
Yeah.
VIX was literally right there. Here's our first class, right? Right there. Teetering below 18 halfway point. Teetering below, right? Looking like, woo, going. And then we get this Moody's news. Looks like, heck, we're going to break back up above the China number, right? Panic.
Yeah.
No.
Would you say that we got the Moody?
Exactly.
We got the Moody blues
right when we started class. Scavenger sold my Rip Zone VIX call this morning. Should have sold at the opening. Normally what I'd say is you could roll or something but this is only the first move out of this. And I don't normally if you have an existing position, of course you could sell something or roll, but putting on new positions, I like to see to see what, if you get a little bit more action out of this. I think what's more important is from a volatility point of view, if vol's not moving from last Thursday, this Moody's thing is not moving the needle. It's not. It's up from Friday, kind of into the weekend, but we're only down 119. I mean, Mark, what is this? 80? This is almost just a weekend move today.
Yeah, it's about, we're up a weekend adjusted. We're probably up about 50 basis points.
Right. If anything for Rip Zoners, if they wanted, roll the call up, take a couple of bucks, but I wouldn't abandon a June call at this point. It's too early. I think the other thing too for vol watchers and bond watchers is they want a budget deal. The market wants a budget deal, right? Again, a budget deal, if it even good or bad, it's a deal. It's like it's done. It'll be signed. Now the markets can move forward. The more that this deal lingers on because they can't do anything, I think we're going to seesaw around this halfway 18 point. And I don't know how long the budget deal will go on for now. What have they been talking about it for what, 4 months, 5 months? So again, I don't know what it'll be, right? I've got a lot of opinions on it that don't matter. But from a vol watcher point of view, we're hanging out at this middle area. Vicky just said the House passed it, so I haven't seen what's in it yet. Then the Senate has to do something, and we'll see what happens. But from a volatility point of view, we're still at that inflection, meaning everything else that we're seeing makes stocks want to go up. Okay, Moody's just downgraded, and Mark and I, the last time we had the downgrade, I just joined Option Pit, and the SPY was down 20% in 2 weeks, or 15% in 2 weeks. So what I'm saying here is the market is waiting for that shoe to drop. If they pass something that's, I would say, reasonable, whatever that means, we're going to keep rallying. We're going to break through 6,000, and VIX is going to tank. If it actually is a big boondoggle, I think the bond sell-off continues. So, and I think we're going to sit here like that. Now, that's my Rip Zone take. So we're either ripping up and out, or we're dropping to like a 14 volatility. And as far as the stock goes, I like Chewy. Earnings are in June. You want to see a stock that's done well this year? Let's take a look. I don't know about you, but that looks like a pretty good stock this year. considering what's been going on. Had only like barely unchanged, only down a few points when everything was going, and now the money is piling into it. Got crazy momentum. I would love to see the Leisha candle magic on it, but I think it's going to be a $50 stock soon, because very similar to Costco and to Netflix, people don't give up their pets.
That's true.
If you're in here, like we're still I'm still riding some stock in Flash 10 for Chewy. I did sell the call because we're running out of time, but I like long-term calls in here. Vol's cheap, and the stock can move. So there you go. That is my pick. And from a vol point of view, I don't think we're going to get any real action until we have the budget thing gets resolved, and then we're going to see some vol movement.
Yeah. Well, the thing that I find interesting is that the option prices on bonds are just starting to pick up. If you want to flip back to my screen, we've had this pretty dramatic TLT sell-off, and bond options, the prices are, really not very high.
Yeah.
And
true.
That's the part that I think is really interesting, and why I am using bond puts to kind of hedge my equity positions, because equities are going to be late to the party. Bonds are going to move first. Unload my bonds. All right. Then once I see equity start to roll over out of the equity, that's when you flip into your equity puts. But right now, bond puts and volatility calls, because they're kind of closer to the piping of this market, for hedges, makes so much sense to me, right? This market, think of it as an automobile. Most of us just see the exterior and think, oh, that's a pretty car, or oh, that thing is ugly, right? But underneath that automobile, that's where you then have the interior, right? That's kind of your next level of the piping of the market, right? Once you decide the car looks good, you get in and you look around and you say, okay, do I like being in, do I like owning this car, right? That's when you're saying that. But underneath that is the real market, the piping, the engine of the market. And the closer you are to the engine of the market, the quicker you are to react. Now, some things are like an automobile accident, right? Everything reacts at once. But sometimes the piping is, you've got a small leak in your transmission fluid, and then right, and that's the piping starting to break, and then you're driving, and you're noticing that the switching gears isn't quite sounding the way it's supposed to sound, but you ignore it because you're the stock market, and then finally enough transmission fluid leaks out. And you try and switch gears, and what happens to your automobile? It goes kablooey. I don't mean explosion; it just stops working. And then now everyone sees you on the side of the road, and your stock is no longer pretty. And that's why paying attention to the bond market and VIX market is so important. Why we hedge with it. So, Leisha, what did you have a stock? Leisha, what was your stock?
I don't think you're going to want to trade it. It was IWM.
Ooh, I am going to want to trade it. Show me on the chart. Flip IWM on the chart. Let's take a look at this, because I've got an idea.
I liked IWM over 109.
And it's holding support.
It is holding support.
There you go. So here's my idea, right? We just talked about how TLT is TLT is piping. All right. Whatever we're going to throw out there, you can protect yourself with a put in TLT. I just showed you volatility is low. I just talked about the fact that it's going to be the first to really react if something breaks. So I can go out and buy an at the money put in June in TLT, and feel pretty good that that's going to do a nice hedge on my portfolio, at least at the front end of a sellout. And then against it, Alicia's idea I really like, because based on what we're seeing today, this is going to end up being a nothing burger, and rates are going to recover. So we're either going to be like super happy that we're right, or those TLT puts are going to be saving my you know what. Alicia, I'm looking at. So I was thinking TNA. So what I like about TNA is that it's only $30.40. It's triple long. And as you stated, rates are at the bottom. Now, you can see we've rolled back over a little bit here. So I want to be judicious about my entry. And I want to get in. I don't want to, get caught up. But the options on this are not very expensive. The stock is trading $30.40. Going out to June, the 31 calls are going to be about $1.85 in TNA. This is the triple long. This is the triple long ETF in the Russell 2000. So I want to buy the TNA June regular, 31 calls, and I want to pay less than $190. And I'm going to drop this into our portfolio, and we will get this one out to you. All right, everybody. Well, there you have it. We're looking at the TNA. I love Chewy as a long-term trade. I'm trying to make money on this one in about 10 days. I like Costco as an income play. But I like I was actually looking at the Russell 2000 over the weekend, thinking the same thing as Alicia. If these rates are a nothing burger, then any weakness in the Russell 2000 should be bought, because the Russell 2000 is way behind the S&P 500 and the Qs, and could play a little game of catch up. So here you have it. We're buying the June 20th, 2025, 31 calls in TNA for less than $190. So for Andrew T. Giovinazzi, the Viking of volatility, whose service Rip Zone has been kicking off all week and is in the perfect environment to trade, is going to be meeting with him in about 30 minutes. There is still time to join. There is a link in chat that you can click. All right. You can join at founding members offer at the founding members price still. And we're going to explain this week how you're really secretly getting two products for the price of one. So stay tuned to your email to that as well. But you do get two products. You get Rip Zone, and I'm working on something that will be its own product, but comes with trades with Rip Zone for all founding members. So again, click this link and join Andrew and Rip Zone in this VIX environment. It is the best trade right now, that volatility trade. Click the link. All right, everybody. So again, for Andrew T. Giovinazzi and Rip Zone, and of course Hans Albrecht and Alicia J. Leslie, the Queen of the Candles, I'm Mark Sebastian. I am your only option. We hope you have a great trading week.